feel like you led the charge initially. I think, as far as I know, the first one to be court-martialed, egregiously being found guilty.
I talk with an immense amount of service members who are currently dealing with the threat of discharge as we speak for refusing to participate with these other injections, whether it's the annual flu shot or others, which are completely unscientific, unjustified.
I will never put my family in a situation again where if I lose my job, whatever the next thing is, means that I couldn't work for another year or something. If that happens to you again, can you survive a year? If you don't wake up tomorrow, how does your family's life change? If blank happens, will my financial strategy hold? Is it resilient against anything the market could possibly do? If you can fill in that blank with something that would disrupt your strategy, it's worth your time to learn this and learn how you can hedge against that. Hey everybody, what's going on? It's Hans here. Got something a little bit different for you this week. I did an interview on a podcast with Mark Bashaw about a week ago, and this is an interview from his platform. His YouTube channel is called Freedom Fighter 1776. I'm going to give a little intro bio for those of our listeners who don't know who he is. You can find this interview on his channel, and we're also going to put it out on ours because it was a really interesting conversation. Mark is a veteran who was also in the mandate fight. He was one of the most impacted of all of us and has a really interesting story that's sort of come full circle now. He practices IBC in his life, and he's also getting policies on his children right now. And so we're talking more and more about IBC and the connections here, just like with Rob Green and some of the other folks we've talked to, where we have our specific fields where either we work or things we've studied and that we're passionate about, and how IBC overlaps with that and just supports whatever else we're doing. So it was a cool conversation. I'm going to read a quick bio here, those of you who aren't familiar. Mark Bashaw is a former first lieutenant in the U.S. Army. He was an Air Force and Army veteran with over 17 years of active duty service, including multiple overseas tours and high-level leadership roles in preventative medicine and entomology. He served as a commissioned officer in the Army Medical Service Corps and was formerly the headquarters company commander at the Army Public Health Center at Aberdeen Proving Ground, Maryland. During the COVID-19 pandemic, Bashaw raised legitimate and lawful objections to the Department of Defense's enforcement of experimental emergency use authorized products, including masks, injections, and diagnostic tests on service members. His protected communications, including multiple Article 138 UCMJ complaints, whistleblower declarations, and religious accommodation requests, highlighted the legal requirements under 21 USC 363 and 10 USC 1170 alpha, which guaranteed the right to informed refusal of EUA products. Despite acting within the law, he was subjected to a sweeping campaign of retaliation by Army leadership. These retaliatory actions included unlawful revocation of his security clearance and access badge, flagging of his personal record to block his pending promotion to captain, 03 in the Army, forced removal from duty, labeled as an insider threat, denial of religious accommodation, never properly adjudicated, court-martial charges under Article 92, involuntary separation based on what were later confirmed to be unlawful mandates, threats of Leavenworth imprisonment, and escorted to the weaponized behavioral health appointments. So he was one of the first people to actually get court-martialed for refusing rightfully the unlawful COVID orders. And the judge at the court-martial found him guilty, but recommended no punishment. It was a very weird outcome. But being found guilty at a court-martial is something you're going to have to report on just about every job application, et cetera. Like, just because there wasn't a punishment issued at the court-martial, the implications of that are huge in his personal life. And we have a great update that happened a couple days after we initially talked. On May 28th, 2025, President Donald J. Trump issued a full presidential pardon of Mark Bashaw's court-martial conviction, recognizing the truth of his claims and the unlawful nature of the actions taken against him. So just like Mark was kind of first through the gauntlet and actually went to court-martial standing up for what was right, he is now, as the pendulum is swinging back, he's on the forefront once again. And the fact that he got a full presidential pardon by President Trump is incredible. And so we hope you enjoy this conversation. Brian will be on his show at some point. We'll post that as well. And then we hope to have Mark on our show as well to talk more on the IBC side. But this is my interview on his platform, Freedom Fighter 1776. You can find it on YouTube. All right. Hope you enjoyed. Cheers.
Welcome to the show, Freedom Fighter 1776. I'm your host, Mark Charles Bashaw. We get quite the show. We got Reprimando backstage, Hans Tui, Reprimando military, former military pilot. So we're going to be talking with him. We're going to be talking with him about the COVID-19 shenanigans in the military in general. And we're also going to be talking about some financial tools, such as the infinite banking system. But first, I want to talk about what just recently happened in my personal situation. And I'm going to go ahead and share the screen real quick. Here we go. Share screen. Bam. So on May 28th, 2025, this past Wednesday, I got a call from the White House. And the pardon czar, Miss Johnson, the pardon czar, and Earl Matthews called me directly on my cell phone to inform me that the President of the United States, Donald J. Trump, gave me a full unconditional pardon for the conviction in the court-martial for refusing to participate with these experimental mass tests and injections. And so here is the pardon warrant right here from Donald J. Trump, signed without the auto pen, folks. And so that has been transmitted over to the United States Army, and the ball is now in their court. If you want to know what happened and the details of what happened in my situation, and frankly, many others, like our guest here today, he's going to talk about what happened to him and many of the pilots in the military. Well, then go over to freedomfighter1776.com and you can get all the evidence-based facts there, because you are not going to find it in the mainstream media. It's just the world we're living in. Enemy of the people, mainstream media, they're not there to help you. They were there to psychologically manipulate you and cast fear upon you to participate with this hoax, the pandemic. And so our guest, bringing him on now, welcome to the studio, Hans, Remnant Finance. Hans, how are you, buddy? Give the audience, I have a little bit of background. I want to go into it real quick, if you don't mind, but I want you to dive in a little bit deeper after I do that. For over a decade, Hans Stasi Tui has been an enthusiastic student in personal finance. He was a vocal advocate of government qualified retirement plans and conventional financial planning. Complete lack of control over capital never registered as a problem, and he maintained blind faith in the common sentiment that the market always goes up eventually. Amidst a thriving career as a naval aviator, he was well on track to a coveted military pension and distinguished military service to a government whose intentions he had never previously questioned. His career was abruptly derailed by his refusal to obey the unlawful COVID-19 injection orders. That experience changed the way he saw everything, and government-promoted capital strategies were no longer exception. After being permanently grounded from flying, he had plenty of time to study and reevaluate his future without an expected pension. He met Brian Moody in a pilot mandate resistance group to the unlawful COVID-19 jabs. And then they now work together as partners for Remnant Finance. So welcome, Hans. How are you?
Hey, man. Thanks for having me on. It's a pleasure to speak with you and your audience, and congratulations on the pardon. That's huge news. I feel like you led the charge initially. I think, as far as I know, the first one to be court-martialed, and particularly egregiously being found guilty. And now the pendulum's swinging back. We love to see it. And once again, you're out front, tip of the spear here. So I'm really happy to hear that news. And I feel like we're stacking up some wins between the Secretary of Defense admitting on paper that it was an unlawful order, the fact that your court-martial, you weren't punished in the court-martial. That was the other part that the media never picked up on. And you never got any punishment. The judge specifically said, I don't recommend any punishment. And so it seems like they're trying to just bury this side of the story, but the fact that you got a presidential pardon is huge. These wins kind of keep moving the ball down the field, and more people are going to be like, wait, you got sent to court-martial for what?
And
Yeah.
so it's great to see the pendulum swinging, and I hope we can continue the effort. There's a lot of people out there that are really, really out there hustling and getting some push for accountability. So hopefully that happens. Mission's not over yet, but yeah, it's been a wild ride the last almost 5 years now. So
I want you to dive into it because you talked about, like my situation. It was unique in the fact that they went full blown court martial, but it's not unique in the fact that the damages and destruction in the wake of these mandates. So what? And you were a pilot, and the thing unique about pilots is, they mandated not only they mandated experimental ejection on all of these pilots. And we even have federal laws that prevent pilots from even being mandated to take a federally approved, FDA approved injection for a certain amount of time after it's on the market. So what happened to you, and what are you still dealing with? Are you still dealing with that? I know many people are still dealing with these after effects of the retaliation, of the unlawfulness of the order. So what are you personally still dealing with? And are you talking to other pilots, either still in the military or many of them got out?
A lot of them, almost everyone I know that was in the fight personally got out after all this. Right now, what I'm still dealing with is a daily phone call from a debt collector. That's sort of the tail end of the story right now. I get a call once a day and a voicemail from a debt collector to call them back. I'm in debt to the U.S. Treasury, and I guess I'll kind of cover the overview of that story, and how we got to this point. But I'll say from the start that I wouldn't change any of it. When you feel that God is pushing you in a different direction, and you just you kind of let go of the idea that you had for your life and realize like this path is not the one I'm supposed to be on. Or maybe it has been to this point, but I'm going a different direction. Everything was so clear to my wife and I, as painful as it was at the time and as frustrating as the last couple of years have been. I wouldn't change any of it. So none of this is from a position of like being a victim of this. I'm so grateful now for the career that I found, or that found me, and through this fight. I mean, if none of this had happened, if you had told me 5 years ago that I would be out of the Navy fortunately I got an honorable discharge, but that was dicey as well.
Yeah.
That I'd be out of the Navy, that I would be working in the financial space, particularly in the life insurance space, that I would be we would be doing a home birth for our daughter. And I just would have thought all of that sounds crazy. I was pretty conventional in my thinking, and a lot of this woke me up. I was fortunate. So I'm a helicopter pilot by trade, did 14 years, all told, 14 and a half years in the Navy. And I flew the H-60 Romeo helicopter. As far as our career trajectory goes, I was on track. I was meeting all the milestones. I had a pretty good shot at, I had a guaranteed shot at doing 20 years based on, if you make certain milestones in the aviation community, you're going to make 20 guaranteed. And, unless you get a DUI or apparently refuse to follow an unlawful order.
Right.
I was on track. I had a good shot at making commanding officer of a squadron, which is sort of the peak for an aviator. You never know how those boards are going to shake out, but I had all the qualifications. So on paper, I had a fantastic career, and I love flying. I love the squadron life. It was a good career, and I found myself in Massachusetts when the mandate, or when COVID happened, because I was doing a grad school tour for my final 2 years on contract before I had the choice to either separate for the first time, which is where most guys drop and go to the airlines, or continue on for what's called a department head tour, which is where you put on 04, you move into an operational squadron as a 3-year tour, as either the operations department head or the maintenance department head, something like that. And that was the one that I signed an extension for. I signed a 3-year contract and got a bonus to sign on. But that prior 2 years, I was doing grad school, and I was, for all intents and purposes, I was basically out of the Navy. I was attached to the ROTC unit, but I never went to the building. I never had anything to do there. When everything went online, because of the pandemic, I had no affiliation with the Navy apart from being on paper part of the ROTC unit. And so I was very fortunate. My wife and I had a great time. We're traveling all over New England. We my wife's from that area, so we got to see a lot of that area, and I fell in love with it. I think we're probably going to be moving back there in a couple of years. We had a fantastic mandate time because we were just up in New Hampshire,
New Hampshire.
Live free or die.
Live free or die, baby.
There's very few rules, at least at the part that we were in where my in-laws live. There's very few rules. And whereas Cambridge, Massachusetts was a ghost town and everyone was just terrified of their shadow, New Hampshire was pretty free. And so we had a great time.
What county in New Hampshire were you in? Do you remember?
We were in Belknap in central New Hampshire near Lake
Okay.
Winnipesaukee.
Yeah.
I think it was a lot more like Massachusetts down in the southern part of the state, but still nowhere near the same degree as
Right.
Cambridge was. And so great time during the mandate. And then, we kind of knew this is coming. I'm about to go back to San Diego. We're going to be moving for this 3-year tour that I had already signed a contract and been paid a bonus for. And so when I got back to San Diego, they promptly benched me from flying. I was supposed to do a training syllabus a couple months to do an aircraft refresher before going to the squadron. And as soon as I got there, I submitted my religious accommodation request for the COVID shot. My CO of that squadron helped me. He was supportive. He recommended exemption for me.
Nice.
I got all the, I did all the administrative side of things. And as it was the case with 100% of RARs, they denied it without looking at it, without considering my position or anything like that. And
of course.
Got denied, submitted the appeal. That got sat on for 2 years. And in the meantime, I was told you can do the you can do the sims and you can do the classes, but you can't do the flights because we can't allocate flight hours to you because you're not deployable. Therefore, my orders were frozen. I was told just to sit and wait. You can't go to your squadron. You can't fly. You can't do this syllabus. And so I'd sit and do a simulator event with 8 people in the same room and then go into the simulator, fly the event, and then the corresponding flight the next day with one single instructor. I couldn't do that one-on-one because of the safety risk, but I could sit with the same people, like 4 times more people in a room the day before. Of course, we all know, we don't need to rehash how absurd all of these policies were, but for how it translated for me was I would go in, I would do an event, I finished that part of the syllabus really quickly, and then I just sat and waited. I didn't want to waste that time and not get anything out of it. And I was a stay-at-home dad at the time, which was great. And once in a month, maybe they would call me and just give me an update and be like, yeah, you're still frozen. You still can't go anywhere. We're just not letting you fly. And so I said, I'm going to learn something from this. And I looked into after I came around to a few different ideas and eventually settled on like insurance, something that I don't know anything about. I've always written off, and I learned a ton about that. And the cool thing was I got kind of went down a rabbit hole where I took the lens of what I had learned, I had been exposed to about the medical system and how the whole idea is to keep you a patient. It's not to heal you, right? It's just a sick or a healthy person doesn't generate profit. And so I kind of took that lens of now all of a sudden becoming skeptical of my government's intention, skeptical of the DOD, thinking, all of a sudden, like, I know you guys are breaking the law. I've sat with my CO and said, hey, this is illegal. This is an unlawful order. Can you stand up for me I'm being punished here? Because I was being sent all over the country on these ridiculous assignments in the meantime to kill time. And they're like, hey, this is my hill to die on. I thought, we all talk about honor, courage, commitment. Like as an officer, like your people are the ones that you are in charge of the people below you, and that's a privilege, and it also comes with responsibilities. Yeah. And hey, I'm one of your guys, and I'm proving to you in your office that this is an unlawful order. Can you push back against this and let me fly and continue my career? Because in aviation, your timeline is so rigid. If you miss a milestone, you're done. I was already at that point pretty much like everyone knew. They would have told me, yeah, we can get you back on track, but no, everyone knows you're not getting back on track after that. And I was already past that point. But I was like, hey, I can at least go fly. I got a few more years on contract. I love flying. I'm good at it. I want to fly. And they said, no, we're just going to wait out until we get orders from above. And so I saw very quickly that the primary, the core value of the Navy, despite what they say, is career preservation at the more senior levels. No one was going to rock the boat. No one wanted to say no. And so I sat there in limbo, and I learned, and I did a deep dive into the world of insurance and macroeconomics. And the cool thing was my grad school program, I got to learn, my economics professors were some of the biggest names in political economics. Larry Summers and Janet Yellen and Jason Furman, like people that if you follow economics at all, you've heard their names.
Right.
And so that was really cool. I was going down the rabbit hole of reading The Creature from Jekyll Island when I was in grad school. I was learning about the creation of money, fractional reserve banking. And I'm specifically asking Janet Yellen, like, hey, how long can this go on? And just realizing that this post-Keynesian mindset is destined for failure. Like, it has to implode one day. And we may or may not be coming up on that point. It seems like this administration is trying to forestall what's called Triffin's dilemma, which is the, kind of the fork in the road you're going to come to when you have the world reserve currency. We're there.
Right. Yeah.
And so, yeah, my eventually 2 years in, I'll get to the economics part later, but 2 years in, I've been bouncing around. I was in Texas doing nothing there on IA orders. I was at the wing here in San Diego doing nothing. They just couldn't find anything for me to do, and I was just in limbo. 2 years later, when the mandate drops or is removed, they said, all right, you are cleared hot. You can proceed on orders. And I said, yep, sounds good. I got 1 more year on contract. I'll do the syllabus. I'll wrap that up, and I will do my last year at the squadron, whatever you guys need me to do. And they said, no, you need to extend your contract because you have to do 3 years at your squadron. That was the contract.
Right.
And I said, well, respectfully, though it is not due, you guys wrote the contract, and here's the date, published right here, June 2024. That's when this contract expires. I followed every order, every lawful one up to this point. If you're short 2 years of service, it's you bear the burden of this because you ordered me to not fly. And so I'm not going to give you a blank check of my time. I know contract law. You just sent me to grad school, and I took several classes in that. You need to offer me consideration, i.e. you can give me a written offer of here's what we will give you to extend your contract. They said, no, you have to give us until at least August of 2026 or beyond to make up for these 2 years. I said, absolutely not. That's not what you put my family through the last couple of years. Though, again,
the breach of contract, the breach of contract was on their side.
Right. And I had it easy. As crazy as the story is, I was 3,000 miles away from anyone putting any pressure on me at all. Now, my CO of the ROTC unit told me I was going to get court-martial, told me I'd lose my wings, told me I'd have to pay back flight school, but he was just an idiot, and I knew that was a bluff. And so I had it very easy. I had no one coming down on me. By the time that I got back and got benched, we were well down the road, and I got to watch from a distance as guys actually faced the pressure, actually got this isolation in their squadrons. You're the only one wearing this absurd mask because you're not vaccinated. Like, I didn't have to experience any of that. And when I got there, they were already kind of walking on eggshells with me because they're like, now it's kind of clear this was an unlawful order, but we don't quite know what to do because we haven't gotten the order. So I had it very easy to watch from a distance and kind of steel up my resolve for when I actually got there. And so I said, no, I'm not going to give you extra time. This is that's not how a contract works. And you guys wrote the terms of the contract, so I'm going to hold you to it. Well, they charged me with breach of contract, and they said that because I refused orders to my department head tour, I breached my contract. And so what they did was they assigned me a debt for the bonus they had paid me. They canceled the third. They went back in time and picked a month where I was no longer eligible for my monthly fly pay, took that back retroactively, and assigned me a debt for that amount.
That's great. It's
and
insane.
So
it's insane. It's all insane.
Yep. And then they sent me to Virginia. So I lived in San Diego. They said, all right, well, we have 1 more year with you, so we're going to send you to basically 03 sea duty orders. And so I said, well, okay, I mean, you have me for 1 more year, even though like I didn't breach contract, but contractually I still have 1 more year of service. So, okay. And they gave me orders to a ship, an amphib in Norfolk, Virginia. And I said, hey, you guys know, I'm talking to the detailer, and I called him and I said, because he had screened my calls. He wasn't responding to emails after I got these orders. I know they were high-fiving. They're like, let's send them to the worst possible place you can send a pilot, which is an amphib, non-flying, and in my case, across the country. And so eventually I created a fake number. I called him, he answered, and I was like, hey man, Bilbo is his name, Josh DeFore. He's a CO out here now, but I'm kind of done with not naming names. I said, hey Bilbo, you got to talk to me now. I got you. Hey, there's like 60 ships in San Diego Bay that I can see from my balcony. You could send me to any one of those. They're all undermanned because of the recruiting crisis. I'm going to be on board for less than a year with terminal leave. I'll be there for 11 months. Like, I'm not going to deploy. you can't find, you're going to PCS me there and back cross country twice to send me to a ship that I know doesn't have a job for me. And he said, hey man, sorry, this is my number one priority billet. If I had anybody else, I would send them there. I said, dude, every single O3 aviator in the country coming up on this tour is eligible across all platforms. I mean, there's hundreds of people that are probably eligible for this job. And you could save 2 PCS moves cross country, 6,000 miles of total PCS by keeping me here in San Diego, because I'm going to separate in San Diego in a year. So you'll have 0 PCS moves. Like, I don't know how you can run this by your boss and not get the answer that this doesn't make sense to send me to Norfolk for 11 months. He said, no, this is my number one priority billet. I get out there and my CO of the ship said, hey, I think this is a mistake. Like, this isn't a billet. Like, we don't have a job for you at all. This billet's been filled. And should we call PERS and see? And I said, no, this is intentional. That was the point.
Right.
So they kind of bounced me around to various, I was just sort of like a random 04 walking around the ship, and no one really knew why I was there. And I did almost nothing for a year. They spent about $40,000 in PCS moves, for me to go there and back. And I got out. I kind of just left the ship one day and drove back home because my wife was pregnant.
Yeah.
And I haven't looked back. My checkout process was pretty much non-existent. None of the normal things. It just was. I was just kind of gone like a thief in the night. It was thief in the night. It was a very strange exit from the military. Now when I separated, they passed my debt on to the Treasury, to their debt collection agency, and so I get a call from them once a day. I'm not going to be paying them because it is going through court right now.
Right.
I'm one of the classes, and so once that gets the thumbs up, then we're going to go through and get all that money back. That's the plan right now.
Yeah.
But yeah, it's been quite a ride, and it's just kind of a strange, it's strange to just do such a strong pivot. But when we were up living in New Hampshire, when we going through the mandate, my wife and I were talking about it, and we both knew there's no situation where I'm going to take this thing. It's not on the table at all. There's a 0% chance.
Right.
Because at the same time, she was pregnant with our older daughter, and we were both she was kind of deep diving into pregnancy and prenatal and infant health and all that stuff. And so we're both kind of coming to the same conclusion that we had never really thought about before from different angles. And so I said, there's no chance I'm going to take this. I'm not going to risk my health on this thing. And you made a point early on that was really good, which is like, theoretically, per their rules, like I can't even take, Advil or any of these over the counter things without going to the flight doc.
You can't even take Robitussin from friggin' over the counter and not report that to your flight doc on what you're taking.
I mean, I can't fly across if I fly more than 3 time zones away, I'm grounded for a certain period of time. Like, they're very rigid with rules for aviation for good reason. And so this one, of course, like, not tested. We don't have to rehash all of the reasons why it was so absurd, but we just said, no, there's no chance. And I said, all right, well, if I refuse this, like, my career is over. And we're 14 of 16 years towards the pension. 14 of 20 years towards the pension, healthcare for life, which we had just been planning on that happening.
And you were active duty the entire time, correct?
Oh yeah.
Wow.
And so I ended up doing just shy of 15 years active duty and got out. But we knew, we're like, we need to mentally prepare for this because there's no chance I'm doing it. I'm going to take it, but like, even in best case scenario is I could stay in and I'll never make command of a squadron. Like, my aviation track is done. It's pretty much already done as soon as I step foot in San Diego. So that ended up being the case. I did a year without the family. I lived in a camper in Norfolk, so as to not have to move the family cross country, and got back here. And I did all of the legal remedies, all the admin stuff. They feign that there's this concern for whether it's religious liberty, whether it's just the fact that clearly this is an unlawful order. We have remedies for it. And so I did everything. I followed a religious accommodation request that got approved 2 years later, about 3 weeks before my approved separation. They approved my religious accommodation, and that was for all shots, including the flu. So if anyone out there is listening and you want to include in your flu RA an approved active duty on a ship that's about to deploy, saying that the situation did not require me to take the flu shot, I will send that. Anyone who emails me, I'll send my entire thing. You can use that redacted approved RA for the flu and other vaccines as an enclosure in yours, because how are they going to say that your situation. I mean, being an officer on a ship about to deploy to the Middle East, like how could you say that the pressing government need didn't require me to take a flu shot in that situation, but it does in yours? And so I'll send that to anyone that wants it.
That's an excellent point, because we're dealing with, I talk with immense amount of service members who are currently dealing with the threat of discharge as we speak for refusing to participate with these other injections, whether it's the annual flu shot or others, which are completely unscientific, unjustified. There's no need for it. And at the end of the day, we're an all volunteer force. Like, we're an all volunteer force, but you can't make the choice to participate with an injection, a chemical injection that goes into your body. Like, no, I mean, the jig is up, the cat's out the bag. Like, but that's a good point you make. If you're listening out there, hit up Hans and get his approved RA. And this is out for the DOD right now. Speaking directly to the DOD, here we have it. So, we got to stop this hypocrisy and stand on actual science. And the bottom line is President Trump just signed the gold standard of science the other day. So, which if we're gonna follow through with his executive order, well, then all the jabs are on the table because they don't meet the gold standard of science currently. So how did this all lead into? You talked about like the finance a little bit, but how does it all lead into what you're doing now with the infinite banking concept? And what, for the audience out there, what is the infinite banking concept, and how, if they're interested, how can they do more research about it going forth? And I definitely, while you're speaking about that, I'll bring up your website.
Yeah, sure. And on our website, remnantfinance.com, you can find a reading list. The first book to purchase is called Becoming Your Own Banker by R. Nelson Nash. It's about 30 years old. It's very simple to read. It's a 90-page book. You can get through it in a couple hours. That's a picture of it right there. This book changed the way I saw capital, and I would not have been ready to to accept anything that he said had I not already been through this fight. Like I mentioned earlier, the idea that we've been lied to in the medical, government, DOD, legal realm, the idea that we were being deceived and we're supposed to stay in the system and not beat it, I applied that lens to finance. I was already skeptical of the fractional reserve system from spending probably 100 hours reading about it through my time during grad school, and asking people who should be the most well-versed in how to answer the questions and the challenges I had, realizing that there's nobody, that the adults aren't in the room. And so I was already skeptical of that aspect of it, but I would have never accepted that you can address this problem with life insurance, because I'd always heard that the typical, life insurance is just a terrible place to invest your money. And that was something that I assumed was true because I had heard it, just like I had heard that vaccines are safe and effective. But when I started applying a critical lens, I initially tried to disprove the ideas in this book when it was sent to me by my now business partner, Brian Moody, who's another pilot in the mandate fight. He reached out to me and was like, hey, the way that you're talking about finance and economics, I think this might resonate with you. And I tossed the book aside. I came back to it a little while later, and it totally just a light bulb clicked and a fuse was lit. And I was just off to the races. I mean, that whole shelf back there is textbooks about life insurance. I've studied it. It's 100 plus, it's closer to 200-year-old product that is the most misunderstood financial asset out there. But if you understand it, a whole life contract is the most powerful asset we have. And this show is not to get into the reason why. You owe it to yourself and your family to pull that thread all the way. And maybe it doesn't work. Maybe it doesn't make sense to you after doing a full explanation. But I promise you, I've never talked to anyone who has an adamant reaction against whole life insurance the way I did when I first read this book, who could actually explain any of the contractual rights and how we can use it as a foundational savings asset. The correct comparison is not to an investment, it's to savings. So when people talk about, I'm going to go do this with my money because I can get a better rate of return here, I'm going to go invest in stocks, I'm going to buy crypto, I'm going to buy real estate, whatever you're going to do with your money, well, that capital has to come from somewhere. And for almost all of us, that somewhere is someone else's bank. What we are doing is we are replacing that somewhere with our own banking system. Now, we're not becoming a bank despite the title of the book. We're not becoming an actual brokerage of capital for the public here. What we are doing is we're just taking the banking function. So a simple example, I deposit my money with Navy Fed and they give me 3% high yield savings account return, right? And they take that capital, and we're simplifying it here. We're not even getting into the fractional reserve aspect where they take it, they do what I'm about to describe times 10 or times 20, depending on the reserve ratio, right? You either understand that aspect or you don't, but let's just keep it very simple right now. They're giving me 3% on my money in my high yield savings account right now. And someone else goes and gets a car loan from Navy Fed and they get a 9% interest rate. Just for easy math, that means that every $3 they give me, they take my money and loan it out to someone else at 9%. They get 9 from them. So that is a 200% return, right? They're making $6 on 3.
Yep.
Or if it's a 6% car loan, that's 100% rate of return, because every dollar that they give me in interest, they're collecting 2 from the person paying this loan. That, simply put, is what we would call the banking function. And that's what we're trying to do. When you understand the mechanics of a policy and how we have guaranteed growth, guaranteed access to the asset value, the current asset value, you can understand how, and this is what we teach. So I'm not going to get into the mechanics here. That's what we do on calls. That's what we do on our blog, our podcast, the Remnant Finance podcast. We discuss how this all works. But the problem is, we have been conditioned by very aggressive marketing and financial entertainers on the radio that the best thing we can do is to relinquish control and put our money into something that we don't understand and that we don't have any control over, i.e. the market. Now, I'm not against investing. I invest myself. I love exploring new asset classes. My asset allocation model spans the spectrum of different ways that you can grow your money. But we start with the foundational principle of protect, then save, then grow. Protect, save, grow in that order. Because what if I go and sit down with the CFP, what are they going to say? They're going to say, if you do this, if you put your money in your IRA, $7,000 a year during your working career, look at this pile of money you're going to have when you retire. Okay. They're going to assume a lot of things. They're going to assume average rate of return. I demonstrate in a video very, very clearly with math that doesn't make sense. That's not how the rate of return works, because it doesn't factor in the fact that the market goes up and down. So to take an average and apply that like it's going to go positive at that rate every single year, you're going to be off by about a third overshooting. And I took every single 30-year snippet of the S&P 500 since it's been documented. And you're always going to be about a third of what the average rate of return shows you would have had over that time versus what you would actually have with the exact same 30-year snippet of market returns. And so this idea that we're going to just put money in the market, forget about it, we don't control it, and diversification just means different types of stocks. Well, who is that money sitting with? It's sitting with a financial institution who is then performing the banking function with that capital, with our capital. They're churning it. Banks don't set it and forget it. They're not in it for the long term. They don't think high risk, high reward.
They're making capital off it. Yeah.
Right. They're turning it into more capital. And again, this is ignoring the fractional reserve aspect of it, but just the fact that they're taking our money and loaning it to someone else at a much higher rate of return. We're told, 10% is a great rate of return. Well, they're making 100+% when they loan out your money that they're sitting on. So the problem is we don't have control. We are taught to value products like qualified plans that lock our money away for 30+ years. And that someone else is going to be profiting off of the fact that money is always going to be flowing into your life and it's always going to be flowing out. How in tune are you with what's flowing in and what's flowing out? So in addition to setting up this savings contract, and there's a big differentiator there, we're talking about a life insurance contract that's not based on speculation. It's not based on what ifs. What we want when we build out a financial strategy is you can't come up with a what if this happens, what if blank, that can derail it. Like that, if I can come up with a what if blank and it would topple your entire plan for your life, and you only get one shot at this, then it's not a sound financial strategy. What if the market goes sideways for 10 years? What if? Japan's been doing that for 30 years and they're one of the biggest economies in the world. What if we have even 3 years of sideways or down market? Is your plan going to survive intact? Probably not. But we always start with protect, save, grow, because what good is a $4 million nest egg at 65 if I get hit by a bus today and I can't work? I can't keep putting that $7,000 in, right? There's a what if right there. And so the protection side of it, if I don't wake up tomorrow, and this is something we ask every single client, most of our clients are men, most of them are fathers. We just go through this exercise. It's simple. If you don't wake up tomorrow, how does your family's life look financially? What are they going to be left behind with? How long can they live on that? If your wife is stay-at-home mom, is she going back to work? Who's watching your kids? And so if you'd asked me the first 12 years of my Navy career, if I had insurance, I'd be like, yeah, sure. I have the military SGLI, $400,000. That's a nice check. Yeah, that's a nice to have. Well, when we understand what we're worth, and I say, what are you worth? It sounds kind of like a unanswerable question, intrinsic value aside. We're not talking about that. The insurance company will value at your what's called your human life value, your economic life value, as in you, by going to work, by applying your labor, your brain to whatever you're doing to earn income, are income producing asset for your family, just like a bond is, just like a rental property is. You are an asset to your family. And if we stack all of your assets and list them by worth, you're almost, in most cases, unless you're ultra wealthy, you are the most valuable asset in your family. So they'll say if you're making $100,000 a year and you're 35, they'll say you have about 3 decades worth of work until the average retirement age. So we can expect that over the next 30 years, you will be bringing in $100,000 each of those years. And that's an understatement because most people's highest earning years are in their 50s. And most salaries go up over time. If you're in the military, like that snapshot in time, you know it's going to go up because we get the cost of living adjustment every year when the NDAA comes out. And so, but in that example, if you're making $100,000 a year, which is not, pretty standard for a military officer, depending on where you live, but if you're an 03 or 04 listening to this, you're probably easily making $100,000 a year. If you're 35, you as an income producing asset are worth 30 times that amount. So $3 million. It's a ballpark estimation. There's a whole textbook on how they calculate that, but ballpark, you're worth about $3 million. So if I don't wake up tomorrow in that situation and all I have is $400,000 SGLI, or now it's $500,000, well, that's a nice check to have because we think in terms of net worth, but that's not paying the bills for very long. Right. So what you're depriving your family of is the income you would have earned. So the protection piece is whether you're here to earn that income or not, your family is going to get it. We put that in place first. None of these future projections matter if you don't make it there, if you can't continue to earn that income, or if you don't wake up tomorrow. And so we want to have that protection piece checked off first. And then we want to save because America has a 4% savings rate on average, spiked to about 10 during COVID when people couldn't spend money, but it's hovered around 4% for decades now. That's abysmal. And so that means that of the money coming in, about 96 of it is going out the door. Now, some of that could be going to investments, but if it's locked up and untouchable till you're 65, that's not helping too much right now.
Right.
Cash flow pays the bills. Cash flow funds your lifestyle, not net worth. Net worth is a stagnant number. And so protect, then save, because if you lose your job for a year, and a lot of people are listening because they're in the mandate fight in some manner, or they were kicked out of the military. It's not like if you'd ask any of us 10 years ago, do you think you would just get kicked out, no points, no pay if you're reserve, or go through a court martial and lose your job? And now because you have a court martial conviction, you're unemployable in a lot of facets, right? Was that in the cards for any of us when we're sitting down with our financial planner that what if I lose income for a full year? Of course not, right? And so that savings element, people have different metrics of how they feel comfortable saving, but I would love to be, I will never put my family in a situation again where if I lose my job, if another, whatever the next thing is, means that I couldn't work for another year or something. And when you experience, you're the perfect person to be talking to this about getting court-martialed, getting that conviction, that comes with a lot of baggage. You have to put that on every application for a job. And so like you're limiting your options. So if that happens to you again, can you survive a year? Most people can't survive a month. Most people can barely survive a week with what they have saved. And then after we've got the protection and savings in place, then we grow. We're all about growth assets. We are not financial advisors. We are not going to tell you how to invest and grow your money. We'll tell you what we do. And we interview people on our show that are doing different things across the asset allocation strategy that we personally use. But I can't give you investment advice, and I don't want to give you investment advice. My specialty and Brian's specialty is the protection and savings side, because those are the foundations. The savings, that's your castle. The moat is your protection. When you venture out into it's not, you don't just like venture out to, in conquest and leave your castle undefended or have no castle at all, right? And so we want to make sure that those pieces are put in place first. And when you understand what comes with the whole life policy, how the contract works, not market speculation, not based on a prospectus, the contract that guarantees you certain rights and how powerful those rights are, that achieves very well the protection and savings component. And again, if you have like this recoil notion, I know exactly which financial entertainment you've been listening to, because there's very, very prominent financial entertainers who think that this is the worst place to put your money. And I did too. That's why I threw the book away when
Dave
Brian sent
Ramsey.
it to me. Exactly.
Cough.
We have a video recently where, I mean, his understanding, he does not understand this product at all. And he makes a fool of himself when he tries to describe how a whole life policy works, because he clearly doesn't understand it. And we actually did a video a couple weeks ago on our podcast where we went, basically line by line through a video he did on his show. And it's like, you don't need to take my opinion for it. You can look at actuarial textbooks. You can look at the contract, like the contract performs. Right. Contract law is the basis of our society. There's no way that anyone would send money to a factory in Ohio for products that they're going to receive in a month in California, unless we have trust that contracts are going to be enforced. This is a legally binding contract. Right. There's never been a default of a whole life policy in American history, which goes back past the Federal Reserve, past the fact that there wasn't even a tax code 100 years prior to that. And
I want you to answer this. And why is it that they're not at risk of default? I know the answer to this question, but why is it that they're not at risk of default? Is it the regulatory structure, which is way more stringent for them? And also, what is the most important part, the powerful point of the IBC concept, the infinite banking concept, in your opinion?
Mm-hmm. All right. The second question is kind of, it can be as long an answer as you want. And honestly, it's going to take doing some reading, hopping on a call with us to talk through it. The first question, you're right that the regulatory and the restrictions on insurance companies is orders of magnitude more restrictive than a bank. Now, your 401k, your TSP takes a 50% haircut. Let's say that, right? Let's say it's 2022 and it goes down by 25% like it did. Let's say it's 2008, it goes down by 50%. Can you call the TSP and say, hey, what happened to my money? Like, I had $100,000 in here, now I have 60. There's nobody to call, right? Because what do you mean? Like, that's just what it is. You are taking risk. I'm not against risk, but I am against risk as my savings component. Savings should have no risk. It should have guarantees and certainty. And so a bank is not required. This is, hopefully people know this by now, but when you deposit money in a bank, you forfeit ownership of that. You have a claim on it, but you're not one of the creditors that's first in line, a secured creditor on that money. If that bank were to go under, there are people ahead of you in line that are going to get paid out first. You are going to get FDIC insurance, which is funded to a tune of about 1% of its total liabilities. So there's nobody to call when the market goes down, because that is the risk you're taking. Now you should measure that. You should take some of that risk and you should measure it, because that's how you get growth. But in your savings component, there should be zero risk. And so the insurance company is highly regulated. There's no such thing as a run on the insurance company, because when I have my cash value, which is the net present value of my future guaranteed payout, the death benefit that's going to go to my family, that is guaranteed, accessible to me, whether I want to withdraw it or borrow against it, leverage it. And that gets into the second question, how we use these policies in order to finance and become our own bank. That is guaranteed. So if every policyholder went to the company and said, I want my cash value now, I want to surrender my policy, that's all there. And so that's a contractual right, not a market dependent prospectus. So that's the first level. Your current net present value is there, guaranteed. The future payout is actuarially calculated. So like if every person that holds a policy dies, the company does not have to have that on hand, but they do have to have that amount insured through what's called a reinsurer. So like if I have $50,000 of cash value on $1 million death benefit, they have to have my $50,000 there for me to either withdraw and surrender the policy, because cash surrender value, or to borrow against. It has to be there. The $1 million doesn't have to be there right now, because in my class, which is 36-year-old males at my rating, there's hundreds and thousands of us paying premiums. And statistically, they know with very, very, very high certainty, due to the law of large numbers, how many of us will die in a given year. So that's the actuarial pricing of these products. And so we take that future amount, that has to be that my $1 million that's going to go to my wife guaranteed one day for this policy. Another insurer, a reinsurer, which is a much larger insurer, is going to have that amount of money. If the company were to start becoming illiquid, would have to come in and fulfill that contract. And the third layer below that is to sell insurance in a state. You have to pay into what's called the State Guarantee Association, which would be the third level backstop. If these policies were like, if the reinsurer were to become insolvent, then the State Guarantee Association is going to come in and make the policyholder whole. So the beneficiaries have never been defaulted on in a whole life policy in American history. And so that's why there's no such thing as a bank run on an insurance company. Whereas with the fractional reserve system, if everyone went to get their money, 90% of the people would be out of luck, at least, because they don't have the money, because they create the money and they loan it out.
Yeah, at least 90%.
Yeah, and technically, if you go to the Federal Reserve website right now, the reserve ratio is still set at 0%. That happened in April of 2020. They set it to 0%. It's still there. Last I checked a month ago at 0%. Now, banks aren't actually operating at 0% reserves. That doesn't even really make sense. The smaller banks are typically in, like, from what I've seen, numbers I've seen, like 8% reserve. Larger banks are more like 12 or 15% reserves. But we use 10% as kind of the ballpark because people understand that. And so, and I don't want to get into fractional reserve banking too much, or really at all in this call, but we all understand that a bank is inherently risky, that we forfeit a claim to that money. We have a claim on that money, but not a first line claim. So when things go wrong, we're dependent on FDIC, because the banks can be like, you guys are out of luck. We have creditors that are secured creditors. These banks don't take risks. When you get a mortgage, most people have gone through the mortgage process. They don't go with the, high risk equals high return. They're not like, oh, you're a risky borrower. Now, they did in 2008 and everything crashed, right? So like now with more regulation, they're not just gonna be like, oh, you're a high risk borrower, that means probably a higher return for us. No, they're gonna say, you need to collateralize even more. We need even more guarantees and safety from you. You're not getting out of this. You're not getting this mortgage with, getting this mortgage issued without much more guarantees than someone who is less risk. So they don't believe in high risk, high return. They don't believe in set it and forget it. Traders don't do set it and forget it. They're monitoring every second, looking for minute arbitrage, because there's the rules that the banks follow. And by the way, banks own truckloads of life insurance, hundreds of billions of dollars, corporate life insurance, bank-owned life insurance. That's called COLI and BOLI. They use this as a product because it puts guarantees in place. It's the backstop of what they're doing, because again, they're taking risk too, but they're not exposing their principal to risk. And that idea of preserving your principal is why we can leverage our capital through infinite banking, through using these contractual rights in a policy to take a policy loan against the capital we have, go deploy that without depleting our principal. So we're getting we call it like multiplicity on our money. So my principal, my cash value, is growing contractually guaranteed, uninterrupted, while it's also, through this mechanism of a policy loan, invested in something else. So in my case, I have, if I have a 5% policy loan to the company and I borrowed against my cash value, and I go and I buy a rental property, or I invest in a real estate syndicate that I'm like currently doing right now. Well, my return on that real estate syndicate is 10%. My policy loan interest rate is 5%. I'm making 100% on my money. That's what banks are doing. That's what we're trying to do. Yep. And so, there's a common buy term and invest the difference is what people say. Well, term coverage is, quote, cheap. The price is cheap because the value is cheap. The actuarial math is the same. The fact is, a whole life policy is going to pay out because I don't know much about you, and I don't know anything about people listening. But I know one thing is that you're going to die. So we're going to match that guaranteed event with a guaranteed tax-free estate for your family. If you want that guaranteed tax-free estate, you're going to pay what actuarial math sets the premiums at. Now, if you just want a snippet of that and say a 10-year, 20-year snippet of that actuarial curve, well, they'll adjust the price accordingly, because statistically 98, 99% of policyholders for term coverage outlive their policy. So they know very, very likely you're going to outlive it. And you'll never meet a client that wants to have a term policy paid out, because that just means you died young. If you had a term policy that was guaranteed to go up to your date of death, it would be priced exactly like a whole life policy. Like, term has no value. I'll take that back. It has value as a binary yes or no. Did you die during the term or not? That's all there is. There's no contractual rights to it. It's just, if you die, your beneficiaries are paid this tax-free estate. There is value there. And if you don't have anything else, you should at least get that, because it is cheaper. It's cheap value and it's cheap price.
Yep.
But what we want is permanent coverage, because I want to make sure that my family gets the income that they're entitled to from my production, whether I'm here to earn it or not. And so it's just the idea that the market is your best case scenario. The market's always going to go up and right forever. I always want to ask, what if it doesn't?
Right.
And so now we're seeing a lot of weird things in the macroeconomic environment. I write about it in our newsletter. We talk about it on the podcast. Recently, we had stocks go down, bonds go down, and the dollar go down all in the same time frame. That's not supposed to happen. These ideas, these things that have held true, that stocks go up, so bonds go down. When stocks are down, bonds are up. They're counterweights to each other. That's how you can balance and diversify. That's out the window, because those are dependent on very specific, macroeconomic requirements. And those have held true for a long time. So it makes sense why we'd say over the last 30 years, the market always goes up. But what if it doesn't?
Yep.
And so we don't just say, put all your money into a safe and buy some gold, because forget the growth aspect. We're never going to say that. You should capture like the rising tide. You need to make sure that your financial strategy, we all have a leaky boat we start with. If you're educated if you go through the educational system, you could get a master's degree and still have a leaky boat because you don't understand the process of banking, because that's never talked about. But you can basically patch up your boat so that when the economic tide rises, which is essentially just asset price inflation, the printing of more money, the tides rise, you want to make sure that you're capturing that growth, right? So we don't recommend just have your money in whole life insurance. It is the premier savings vehicle, and it gives us access to the best possible, the most powerful credit instrument that we can have, which is that policy loan I talked about. And if you go to our blog, remnantfinance.com, look up how to use a policy loan, I visualize kind of what that process looks like, and talk through all that. And there's a lot more to explore on that. And that's the kind of thing that 90% of our job is education. It's going to be on the next page there. 90% of our job is the education side of it. 10% is actually getting these policies in force. Go to page 2, you'll see the policy loan article. Yeah, there you go. Bottom left. Oh, sorry, that's the next. Oh, yeah, top middle. There you go. So I kind of visualize what's happening when you take out this policy loan, but you don't have to take my word for it. You can just read a contract, or you can read this article. This is the most powerful credit instrument that we have access to, because we control the terms of the repayment. There's a lot more to get into on that.
Which is solid for individuals like myself, who got destroyed during the whole pandemic with a truck being stolen, and then found. And unfortunately, it was found because I brought it to Texas to sell it after I got kicked out of the military. They found the truck; it was damaged. Had to bring it to the dealership to get repaired. It sat there for a while. I couldn't make the payments, and the bank stole it. And then, my credit took a huge hit. This product, these contracts, in my opinion, I play around with them. I have them. They're awesome. I love the concept, the IBC concept, and I'm able to borrow against myself instead of getting down on my knees for a bank that's going to absolutely rail me with interest rates. And I'm not returning onto my savings account or building my capital or building my future. I'm just asking somebody else for capital and having to pay immense amounts of interest back to them and not myself, which I am currently doing with these contracts, which are outstanding. So I will say, anybody out there listening, if you're interested in learning more, go to the website or even get that book. And reach out. But I want to give you the last words. Where can people find you? What's the best way to get in touch with you? What does that look like when they get in touch with you, and maybe schedule a consultation?
Yeah, for sure. I'll summarize my thoughts with these 2 questions for the audience, and I've said them both already, but I'm going to foot stomp them. If you don't wake up tomorrow, how does your family's life change? And if you could fill in the blank on this question, if blank happens, will my financial strategy hold? Is it resilient against anything the market could possibly do? If you can fill in that blank with something that would disrupt your strategy, it's worth your time to learn this and learn how you can hedge against that. To find us, so I'm on X at Remnant Finance. Our podcast is on YouTube, Apple, Spotify, Remnant Finance Podcast. And then remnantfinance.com is our website, and there's a schedule tool on there. We are primarily an education company that issues and manages the insurance contracts for people that want to implement the system. But there is no cost to talk to us and do a call. There's no cost between us and our clients at any time. We don't have any charges with our clients. And in the insurance industry, you get paid by the company, and only if the policy goes in force. And so you can, if you just want to stress test your strategy and say, here's what I'm doing right now. And you just want to say, hey, are there any holes you can poke in this? And I haven't found anyone yet, myself included. I'm still patching holes in my strategy. It's worth your time, and it's worth just, none of us think we're going to be the statistic. I had a neighbor 2 weeks ago, 41 years old, going to play golf with buddies here in San Diego, 6 a.m, gets hit by a drunk driver and killed on scene. 21-year-old kid here at the base. So that kid's life is ruined. And the family lost their 41-year-old son. That just happened like that. That was a Tuesday morning. We all know someone like that. We all in the aviation community know someone who's died in a helicopter or a plane crash. And even if you're not in the military, if you're in the military at all, you probably know someone who's died in combat or just unexpectedly passed away. And like sudden and unexpected is not it's not so sudden anymore. It's not so unexpected anymore. Yeah. And so we don't think of ourselves as that statistic. We look at our future projection and we say, here's how much I'm going to have. Here's my plan. If you're not there as the income producer in your family, you got to be thinking about what happens. It's worth it to stress test your strategy. We will do that. We'll sit down and we'll just talk through these concepts. If you have that gut reaction against whole life insurance that has been put into you by financial institutions who themselves have truckloads of life insurance, but tell you, leave your assets under management with us. If that is your reaction, it's worth exploring, because I would wager that if you're listening to Mark's podcast here, you probably have some skepticism newfound over the last couple of years about some institutions that you always took at their word because you needed to trust the experts. When you realize that the experts are not actually looking out for your best interest and not telling you things, it's sort of the equivalent of, the politicians who got either a saline shot or just didn't take it at all. Congress exempted themselves from the mandate, right? It's when you see that kind of trickery going on, it has to raise a flag in your head to be like, let me look into this a little bit more. In the same way, if you know that banks, my textbook here for my certified life underwriter certification or charter life underwriter certification is about this thick, and about the taxation of life insurance. The primary usage of life insurance is by businesses. Like there's so much, there's like 2 inches of text about how businesses use life insurance, how to structure those policies, and how they're taxed. If that doesn't tell you something, we should talk. You can go to the Nelson Nash Institute website and find a practitioner in your area. Anyone who's got an NNI, Nelson Nash Institute, authorized IBC practitioner certification. You can find someone local to you, or you can reach out to us, and we'll walk you through it. It's worth a call is what I'll wrap up with.
Awesome. Well, appreciate you. Appreciate your stand against the COVID tyranny in the military, and now what you're doing on the freedom financial side of the house. So, thanks for coming on the show. God bless you. And hope to have you back so we can kind of dive into this some more as well. Maybe get Brian Moody on as well from Remnant Finance. So, folks, stay tuned for that. And we'll continue to have episodes. Also, stay tuned for what the Army decides to do with this pardon warrant. Should be interesting. Anyway, we'll catch you on the next episode. God bless and much love.